Guys, today there's another update video on Bitcoin and Ethereum. Very exciting, the month of May ended with an 11% profit. For June, at the moment, we can't really calculate yet. It was very mixed. If we look at the past, since 2013, it's actually been very balanced. June is also very balanced, although in June we've had one more month with profit. And now the question is, will there be a summer slump or not? Because in fact, in July and August, we've only had 4 times in Bitcoin's history where we were consistently profitable. And we've only had 1 year in 2017 where from April to August we were continuously bullish and only saw price increases. And it will be very exciting to see whether we experience something like that again now, because we must not forget that institutional investors are now on board, and they could of course drive completely different price increases since we have so much positive news, especially when it comes to Bitcoin reserves. Another piece of news that I'd also like to show you in a moment for the crypto market is, as we go through, Ethereum. Because what is also very, very interesting are the ETF inflows and outflows. On Friday, for example, we had an outflow of 616 million in Bitcoin, but an inflow of 70.2 million in Ethereum. If we look at the previous Thursday, there was a 350 million outflow in Bitcoin and a 91.9 million inflow in Ethereum. Could this be thanks to these news here that new Ethereum and Solana staking ETFs will be launched in the coming weeks? I actually remember an interview with BlackRock where they said that Ethereum would skyrocket if the ETFs are approved by the SEC. What isn't quite as good, as I've just seen, is that in the last 38 minutes, news came out stating that the SEC has legal concerns regarding the staking of ETFs. But I still need to verify that or take a closer look at what exactly that means. If that doesn't happen, then yeah, Ethereum will probably miss out on the massive push that BlackRock was talking about. Otherwise, regarding my positions from the last videos, I'm still long on the one at 104 to 100, as I previously mentioned, and at 100,000 I'm compounding, so that one is currently at a slight loss. Then we still have the Ethereum short, which is also still in profit at the moment. I've realized a bit of profit there, and the 100x long is still in profit as well. Then, in the coin margin positions, I still have an open long on XRP, which is also just slightly in the red right now, while the Ethereum and Bitcoin positions are still in profit. I'll update you on that as we see how the coming week develops, and also how things look with the new exchange launches this week. In any case, my additional long orders are placed and waiting to be triggered. If we now move on to Bitcoin, Bitcoin is going to be super interesting in the analysis, especially when we include the monthly time frame. The entire chart is actually focused solely on the month of May. After that incredibly strong rise from $94,000 up to $111,000, unfortunately we've now broken through 3 support zones to the downside. The first one is this horizontal support area here. In the last video I talked about how we shouldn't break below that level. I think it was the last video or the one before that. Unfortunately, that's exactly what happened. Before that, we had already broken below this ascending trend support here, and after that it was rejected on a retest, and then here again it was rejected on a retest. And now we still have this yellow support line, which is currently also acting as resistance. We've also broken below that and just had a retest. The only thing that can help us now is this local volume area here. And that's precisely this area here which was accumulated during this sideways phase. And under no circumstances should we break below that area. Or if it does happen, then only with a small wick like we saw here, then we should actually expect further downward movement. In that case, we could see lower prices due to the low volume present in this area. And then I also see the possibility of around $97,000, which could come into play at my key level that we already had back then. What would support this? If we zoom out, it could simply be a nice retest, yes, for bullish price action, but at the moment it actually looks more like we're forming a bit of bearish price action. We've made a low here, then a lower high, and currently a lower low. And that would have actually been an important support. What could this mean now? Why do I even see the possibility of a recovery at least into this key level, up to around 170,000? Before we might actually pick up the liquidity at 100,000, let's take a look at what I mean by that. We still have a few billion lying here at $100,000. But what we have here in the short term in the 3-day liquidation heat map at around $170,000 is a lot of new liquidity. And that could indicate that we might actually see a recovery here, maybe pick this up and then continue to fall further down and pick up that liquidity. Unless we pick this up right away and say, okay, we don't care now, so that we get a retest here and collect the liquidity in this price range. Why is that? What else could support this? Let's take a quick look at the Fibonacci level, a bearish outlook. If we take the current high or the last high to the current low, assuming the low doesn't move further down, we have the possibility here to get a reversal between 0.5 and 0.6 weight, and then to continue moving downward from there. But if we see another low now and we say we're really going even further down, then it could even enter this price range. Here we still have volume support clusters before we get the reversal. That would then match up exactly 1-to-1 with this key level and the liquidation heat map, so that we pick that up and then possibly continue to move further down. And that would also be the case with the Fibonacci retracement extension. If we look at it and say we had a low here and then a new high here, we would also have a target zone in this price range at $100,000, which is super interesting. But of course, I'm only talking about bearish scenarios here the whole time. No, of course, we're also looking at this from a bullish perspective. If we take the monthly low to the current monthly high we've had, we actually also have here, and this again matches up with this last volume support here at the 0.5 Fibonacci retracement, which we have right here. If I extend this a bit further over, you can see it a little better. We would actually have the 0.5 support at the last volume block at 102,000. And that could actually lead to a reversal here so that we see a higher price again. So for now, we just have to wait and see what happens. Maybe even today, Sunday in the afternoon or evening, or then tomorrow when the markets open. Because if we zoom out, and unfortunately it doesn't look quite as good when we zoom out, we now have our last support area up here, which I just mentioned. And if we break through this price range here, we could actually see potentially lower prices. First at 97 to 98,000, and then possibly something around 93,000. And that wouldn't be too pleasant, especially if we compare it again with the altcoins. And we see that Bitcoin has reached a new all-time high, while all the altcoins in this cycle are still far from their all-time highs. If Bitcoin were actually to drop sharply now for some reason, then we would see price levels in the altcoins that I think none of us wanted to see again, because that would fall so low that none of us would like it. Nevertheless, we always have to keep in mind one thing and what just happened with Bitcoin if we go back to Bitcoin again. And why did this happen here? Why did we break downwards and continue to fall? It was simply the news about tariffs concerning China. Now, starting July 4th, there will be 50% tariffs imposed on aluminum and metals. That's absolutely not good. The market immediately corrected because of it, but a single announcement would be enough to reverse it. If China and the USA reach a solution, you already know what will happen. The price would pump again. These are in fact news events. Whenever Trump says something or puts out a post, whether it's positive or negative, the market goes crazy right away. And right now, I think that's the only indicator that actually has a real impact on the market. Nothing else. Finally, for those of you who are still watching, I want to show you something on a monthly basis. You really need to let this sink in. I'm going to switch to the monthly chart now. If that actually happens, and we now have an inverse head and shoulders, hey, then that could really bring us to the next pump. And if we look at it here, it really is just an inverse head and shoulders on a monthly basis. And if we look at what's just happened here and extend this out to here, we can see that we've just played out this inverse head and shoulders pattern perfectly. And in fact, we've had a retest to the downside, and we haven't yet reached the price level of this inverse head and shoulders. Because if we look at where this price level would technically be, according to how an inverse head and shoulders is played out, if we look into it, that would actually be at a price range of around $136,000. And that brings us back to the divergence, which I've mentioned several times now that we have on the weekly chart, and this extended divergence that we have here. As I said, hey, we can, let me remove this again so it looks better or clearer on the chart, so that we can reach this price range of around $130,000. Because we had the divergence here. And if we extend it, I still stick to this theory so that it can play out. After that, there was a price drop of around 35%. The market recovered, but not that much yet. We've also had 7 bullish candles now, let's not forget that. 7 consecutive bullish candles. Now there's a small correction. Let's see what happens with this one, or today, Sunday. Maybe that will change as well. But for us to say we're going to keep moving up here around the prices of 130, who knows how long it will take to reach $132,000, $134,000. And then maybe we would also test the RSI here for a double divergence. And after that, that would actually be a very bearish sign. That means we should keep an eye on that. Maybe this monthly inverse head and shoulders will even play out beautifully with this retest that is even clearer to see on the weekly chart. I think you can see that very well here now. If you extend this further here, I'll just do it like this now, then you can see that we actually had a very, very nice retest here. Where was that? Roughly in this price range. I'd have to lower this a bit more as well. Do you see the retest? Then the price shoots up. Reaching the price target roughly doesn't mean we'll hit it exactly, of course. That means roughly here. So where would that put us? $132,000 could match up perfectly, and that is still my long-term price target in this price range of $130,000 to $135,000, where I will once again take profits, but also open short positions due to this double divergence downward here. Exactly. Leave a like, drop a comment. I would really, really appreciate it, and see you in the next video. Have a great Sunday. Bye.